Hello, everybody, and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today, we are going to be revisiting Pfizer stock for the first time since last December when we bought it. Had a request come in a couple weeks ago to review this one, and it's been almost a year, about 11 months or so, since I bought this one and shared the video on the channel. So I thought, and they just reported earnings today too, which are not reflected yet in the fast graph, but will be tomorrow. So we're gonna revisit this and review kind of my thoughts. I watched most of my previous video to refresh my mind. I'm gonna try to make this one a little simpler. I got a little into the weeds on that last one. I think I can simplify things a little bit this time around. As always, this is not individual investing advice. This is just how I analyze stocks. And Pfizer was kind of a weird one to some degree, but so we bought this one. The video came out on, I have it down as December 14th of last year, which was 2023, and I'm recording this on, let's see, where are we at? October 29th, 2024. So the stock is up about almost 14% with the dividend. The dividend's a decent chunk of that, so the price hasn't moved too much, but it did pay a pretty high dividend. That's underperformed the S&P 500, but the absolute returns have been fine. That's pretty much what I'm aiming for, 8% plus inflation, so that's beyond that so far. The closing price on the day that I made the video was $26.13, and I want to say I had videos that come out before that where the buy price was about $26, so that all kind of works out. So let's see where it stands. So that's how the performance has been. Let's see where how things stand today. I just updated everything in my spreadsheet today. So the story with Pfizer is they had pretty slow growth, honestly, leading up into the pandemic. Then they had a big spike from the COVID vaccines, and then a big decline from people not taking the COVID vaccines, or the use going down once the 2 or 3 waves we've had now, maybe more, of different COVID kind of infections have gone around the world. So and then also there's been just a lot of negative press in media over the vaccines, especially on the internet, and they become kind of politicized. So there's like there's a crossover between people who don't like the vaccines, don't like the mandates, especially of the vaccines that used to be in place in a lot of places, and then who also might not like the stock because of that. So part of my thesis was that creates an opportunity, because a lot of people that would normally buy Pfizer stock, and probably who did buy it actually back here and lost a bunch of money. So if you take it from near the peak to, when were we looking at it? Right there. So it was down, I didn't even pick the exact peak, but well over 50%, even lower than pre-pandemic when it was $37. So it was really down in the dumps now. And the idea was, one, we'll probably have a recovery off this earnings bottom with better earnings just normally in the future. And then the hope was that eventually they might come out with some new products or whatever and get growth going again. That's kind of a wild card, but the initial bet is there'll be just a bounce in normalization. Once I included inflation, I basically took these peak earnings at $2.95 or $3 a share, extrapolated out normal inflation, and got about $3.40 a share. And I said, within 2 years, if the earnings get to $3.40 a share, and then they grow, I think my growth rate was maybe like 5 or 6% or something after that, for 8 years more. Usually I use 10 years, so we kind of had 2 lost years of the recovery to 340, and then 8 more years of growth. What kind of like CAGR would that produce? And that's kind of the method that I used to come up with a valuation for it. So a lot of assumptions. They weren't like crazy high assumptions. $3 a share or 340 is just really all I was saying is earnings will recover inflation adjusted to where they were before the pandemic within 2 years. And then they would be able to grow at some sort of reasonable rate after that, 5 or 6%. So that was the method I used. It ended up with like 26 bucks a share. Now I think I ended up adjusting that buy price down later on after I already bought it. I didn't sell it or anything because I think at the time I did not calculate in the debt from the Seagate acquisition. It wasn't showing. It hadn't shown up yet in this metric that I usually use down here. So I actually adjusted that buy price down closer to $20 a share at some point this past year after I bought it. I think it was, like a couple months afterward. Somebody probably pointed out to me that I wasn't taking that into account. So I adjusted that down. And then, let's see, let me pull up the right spreadsheet here. So for the past, 8 months or whatever, this buy price was about 20 bucks a share. But they recently reported earnings. Earnings came in good. I recalculated the debt calculation. And so let's talk about the earnings first here. So earnings for 2024 going into the report this is what analysts were on average were expecting, $2.63 a share for 2024 total earnings. Guidance from the company was higher than that. They said 275 to 295. So this will probably go up to like 290 within the next few days. So we're up to we'll just call it 290. Might even get up to $3 a share by the end of this year. So that's one of the 2 years I thought it would take to get to 340. So now, right now, they're saying 280 for 2025. I expect this will probably go up since they just beat and raised. And so we're gonna be pretty close, I think, to that 340 estimate that I've been using. But now we only have 1 year to get there instead of 2. So instead of going out that 1 year plus 8, or that 2 years plus 8 years into the future, when I look at the valuation and the collected earnings, I can go 9 years now. I'm going out 1 year and then 9 years after that. So I made that adjustment in my spreadsheet as well. Normally I go 10, but since we're kind of pulling forward our vision of what earnings are going to be in a couple years, I'm shortening everything. That makes the valuation more conservative. So I'm looking at 5% growth after that. So we're going to say, can we hit 340 in a little over a year, and then grow 5.22% per year after that for 9 more years? What would the valuation look like? And we'd look at 7.38% earnings CAGR. If you watch any of my other videos, you can see this whole process. But basically, it's how much earnings can you collect over 10 years as an owner of the business. These are adjusted earnings per share. And what sort of CAGR would that work out to? And so 8% is my threshold, like my buying threshold. And right now it's at like 7.38% using those assumptions. Before that was like 26 bucks a share because I hadn't taken into account that debt. So I do adjust for their debt. Basically what I do is I adjust the stock price up to account for the debt when I'm doing the valuation. So you buy the company and the debt, and then these are the earnings that you get after that over 10 years, right, on a CAGR. So before that was about 26 bucks a share. We're basically right at the same point now, like 25, 45. But before I updated this today with everything, this was in between 20 and 21. So it has improved since then. But we're basically still sitting at the similar buy price as I was last year. But the stock is up 13, 14% if you include the dividend. So I think it's on track. Next year, if maybe we get another 15%, that would be nice. I'm not sure what earnings are expected. So right now, yeah, they're looking at 7% from here, from growth off this base. But if everything gets adjusted up, then this keeps going. So maybe we get like 10. And then if they beat, then that's how you get in that low teens range, which for a stock like Pfizer is fine. We know it's not a growth company. We like a fast growth company. It's kind of right on the edge. But if we get the mean reversion and the stock price gets up to where it was back here or even here, it traded at $38 per share. So it's a little distorted sometimes on this. See if I get rid of that, if we can look at it. So the stock price is still all the way down here. And if it just got back to like 40, even 35 bucks a share, but like 40 bucks a share, that's just getting back to normal. It's not really asking them to do like anything too special. And you can get a pretty solid return without taking on like an enormous amount of risk. At the point that we bought down here, anywhere down in the 20s, mid 20s, you're not really taking it. See, it's bottomed right under that $26 level these past 2 years. Anything in that level, there's not a ton of downside like risk over the medium term, and you can potentially get that upside reward. So that was the thought behind it. I think it's pretty much on track, all things considered. It's nice to see the earnings were raised. They have some activist investors involved now that are trying to, I don't know how successful they're going to be, but they're going to try to squeeze something out of these guys. And they're basically probably trying to just be a catalyst to get that mean reversion happening that, I'm betting on. So they're pretty much making the same bet that I am, but they have more power to influence the company a little bit more and put a little bit more pressure on them. So that's probably good for us if we can at least get, that mean reversion. And if you can get 15% a year for like 3 years out of a company, like, if you can get like a 50% return in 3 years, that's great. I mean, for very little risk. So pretty much the same thing that I thought last year on Pfizer. And we'll see how next year goes. If you're thinking of buying it yourself, if you get a dip down to that $25 level, and it's not some crazy news that comes out to do it, I think that's a decent spot to add a small position. All right, if you found this useful, hit the subscribe and like buttons. I have a free Patreon tier, a couple paid Patreon tiers. One of them, I have a weekly pick that actually will come out later tonight or tomorrow morning this week. I just started that last month, and it's going really well so far. So consider signing up for that. It's $25 a month. If you think my buy prices are too low, I think I maybe had, I had less than 10 ideas publicly on the channel last year, but I bought like over 23 stocks, I think. Actually, I just bought 2 more, so we're up to 25 in the past 12 months in the full Cyclical Investors Club service over on Seeking Alpha. So I definitely buy stuff. We've had some good picks in that $25 Patreon weekly pick tier if you want to check that out and read about what that's all about. Those links will be down in the description. I'll see everybody later. Bye.